Hi everyone, welcome to the video. Thank you for tuning in. It's my first for 2020 and what should be a big year for crypto, especially Bitcoin, with the Bitcoin block reward halving just over 4 months away. Before I talk about the prices, which I'll be doing so towards the end of the video, today's focus is about dollar cost averaging with cryptocurrencies. Is it a worthwhile investment strategy? How does it compare to lump sum investing or buying in the dips, which I will touch on, but of course the focus will be about DCA. And before I continue, this must be said, none of the information in this video is legal, tax and or financial advice. I am not a financial advisor. Please do your own research before investing. Another thing I want to mention as well, before I forget, special thank you to CoinMarketCap, DCA, BTC and CostAVG.com for allowing me to use their data, tables and statistics, or what you'll see throughout the video. So what I've done, I've gone through the historical price data for Bitcoin and I've focused on information between 2017 and 2019. I'm going to jump over to my slides that I've got. Now, let's get into it. DCA, so dollar cost averaging, is investing the same amount of money at frequent intervals, say about $200 monthly in this case, over a given period of time, regardless of the asset's price. When looking at the data, please consider the exchange fees, and they will vary depending on whom you are with. Currency conversion fees, if relevant. This is more so for smaller capped cryptos that aren't directly paired with your local currency. With Bitcoin, it's usually the exception. But again, this is just a general announcement based on, say, if you're doing DCA for other cryptos. Withdrawal fees, so when you cash out in crypto, there'll be some fee there, and any other miscellaneous costs or variables to consider. I've got my data on an Excel spreadsheet. It's actually better looking at it there. Okay, just to point out some of the key information. The price data that you see here refers to the closing price of Bitcoin on the 15th day of each month, just for consistency. I do want to mention as well, strictly speaking, these are price points over an 11-month period. I should be factoring in the price on the 14th of January the following year to get the full 12 months, but nevertheless, it's still 12 equal installments there in the calendar year. But with 2017, again, I've just picked the last 3 years. Most people probably getting involved in 2018 and last year, 2019, but 2017 was a very profitable year. If you adopted dollar cost averaging, for those not looking at the screen, let's say you sell the day after you make the last installment, so 16th of December, first thing in the morning there, you would have received a $19,652 profit. I'd say give or take a couple of $100 there, depending on the exact hour, because you need to factor in another thing too, is that when the prices are very volatile, which was the case especially in November and December of that year, that could make a huge difference in terms of when you sell. Based on these installments, the best value for money was in January. $200 could get you approximately 0.24 of a Bitcoin, and the lowest being December, when it would get you just over 0.01 of a Bitcoin. So huge price fluctuations there. Now, another thing to bear in mind as well, I know there'll be more proponents of a lump sum or buying in the dips. Well, you could also calculate, I'm not going to go through it in this video, but if you were to invest $2,400 right in the beginning of the year, it goes without saying that you would have made a huge profit. But let's be honest, no one ever anticipated the price to rise as much as it did throughout the year. Now, assuming that you held onto your Bitcoin and you didn't cash out, going into 2018 here, it's a different story. In fact, you would be at a major loss, generally speaking. So based on this, according to my calculations here, so if you invested $2,400 in those 12 installments at those periods as shown on the screen, you would have lost just over half, so $1,241. The dollar cost averaging there for 2018 at those 12 installments would have gotten you all up 0.35 or 0.35796 Bitcoin. Let's assume that you didn't sell. Actually, firstly, we'll backtrack. Let's say you got into the market in early 2019. The price at the time, so the price dipped considerably towards the end of 2018 and it got down to at the low to mid 3,000s there. Just like 2017, if you adopted dollar cost averaging $200 per month, doing so on the 15th day of each month with the closing price, you would have profited, but a lot less than what you got in 2017. Now, these are the data in tables. I'm going to show you just in a minute the data as displayed in a graph and how that compares to gold as well, actually other crypto investments. But before I do, I also want to say that what you need to consider, let's say, and these are all just assumptions, you can tweak them accordingly based on your situation. You dollar cost average for 3 consecutive years, 2017 to 19 there. With the $7,200 all up, you still would have profited despite the major drop in 2018 and the mediocre year that you had in 2019. It goes without saying that if you got involved after 2017, then yes, your profits would be a lot less. And then conversely, if you got involved well before 2017 and have hodled for this long, that you would be sitting fairly pretty. Now, in the following graphs, line graphs, I want to show you how this compares to gold, because I know there are many crypto critics out there that will say Bitcoin is crazy, Bitcoin is a bizarre investment, it's a scam, and the various things that people say about it. I've input the data that we've been using throughout this video, and according to these calculations now, Bitcoin still outperformed gold considerably. And bear with me if you're waiting to see how Bitcoin compares to other assets, but focusing on Bitcoin versus gold, as is often argued, it has significantly outperformed it. So for those not looking at the screen, if you had started 3 years ago, $200 per month, the Bitcoin value would have been at $14,170 as opposed to gold, $8,126. That's an extra $6,000, and that is irrespective of all of the dips that we've had. And geez, it's been a roller coaster ride, as you can see, but worthwhile if you've held on for this long. Just to run through a few different simulations or scenarios here, looking at the past 2 years, it's pretty much a tie, funnily enough, to give some credit to gold there. Over the past year, despite the average performance of Bitcoin, it still outperforms gold. This is based on the assumptions that we've got here. Of course, do your own research, not financial advice as always. I can't find the chart where it overlaps. Say you got Bitcoin, Ethereum, and any other cryptos like Litecoin, for example, all on the same chart, unlike the DCA BTC website, but nevertheless, it's still good. Okay, so we've got the Bitcoin price data there, and that also allows you to enter in the exchange fee for those not looking at the screen. It gives you Coinbase, Kraken, and Binance exchange fees there, and that's, again, as I said earlier in the video, you need to factor in all these costs because they will ultimately affect your return on investment. So if we look at, say, Ethereum, for example, if you follow the exact same strategy over the 3-year period, you're still up by, about 2,700, just under 2,700 US dollars there, but not as high as Bitcoin, despite the insane growth of Ethereum over 2017. And it has dropped considerably though. Litecoin also features on this chart. Again, that's up as well over the past 3 years. If you ran the simulations for 2, of course, would yield different results. I encourage you to do so. As a quick side note, just for the website, costavg.com, it features Monero, but it doesn't include XRP or Cardano or even EOS. But anyway, I do want to mention none of this is paid promotion or advertising when I give a shout out to the websites. I'm just very grateful for them letting me use their websites and the data and stats, because this video would not have been possible in this format otherwise. So that's pretty much it in regards to, well, specifically about dollar cost averaging, although the video is not over just yet. I'm just going to finish off the slides information. I did say I'd just touch on buying the dips and a lump sum payment. Now for buying the dips, I'm in two minds about it, because I say a detailed thought process involved, because let's be honest, with the benefit of hindsight, we're all geniuses. And what I mean by that is, I'm going to go back to the Bitcoin price data over the past 3 years, just to highlight this, and you can actually go beyond. Okay, so I've got the data here between the 1st of Jan 2017 and today. It's easier said than done when we say buying the dips, because it is extremely volatile, as you know. And it's hard to predict exactly how far the prices will drop or rise in a given period of time. Now, there is technical analysis, of course. There are many technical analysts who get this wrong. There are many who get it right as well, to be fair, and even some of the most experienced people struggle to accurately calculate when the price will rise or fall at a given period of time. I know they've got their EMAs, they've got those moving averages and Fibonacci retracements. And anyway, look, technical analysis is definitely not my thing. You need to have what I consider, and if you beg to differ, please let me know. I'd say an upper beginner or at least intermediate level to advanced level of understanding of price mechanisms and just these dynamics, how they rise and fall accordingly, to make an informed decision about purchasing at the right time to then maximize your profits. So you need to be very patient and persevere and really get a good grasp of how it all works. Now, the high volatility there is a blessing and a curse. That refers more to day trading if you engage in that. Anyway, that's a different topic for discussion. And I say here, to compare apples with apples compared to dollar cost averaging, you'd still need the sum of $2,400 per year, or if you wanted to do $7,200 right at the beginning over the 3-year period. And then, of course, that ties in with a lump sum payment. Now, food for thought, and I know I'd feel like, say, a show of hands for how many people would have pointed this out if I didn't otherwise. With many assets, the prices tend to move upwards, historically speaking, especially if you look at shares. But to be fair, we only have 11 years of Bitcoin data and less for many other cryptos, as opposed to over a century worth of data for many shares. It's not my field of expertise. And skeptics of DCA will say it's not necessarily the best option. However, DCA mitigates the risk. And if you're a new or say in inverted commas, risk-averse investor into crypto, then DCA could be suitable because it's a small amount that you're willing to lose and you're doing it regularly. And I will mention, of course, crypto is risky and highly speculative. Now, the question I have for you is, for how long are you willing to hodl? I look forward to your feedback if you're interested. So that's the end of DCA in these, just touching on those 3 investment strategies there. We'll wrap up with a market overview and a special announcement as well that I have. Over the past week or so, the prices have increased significantly up until about Tuesday or Wednesday there, and then they have dropped again. But nevertheless, they're still up over the past 7 days, pretty much throughout the whole space. Bitcoin at about 7,800 US dollars per coin. Ethereum, $138. XRP at 20 cents. Signs of a slow recovery, or could there be another dip in store throughout the market? Let's have a look over the past 24 hours. Some of the major gainers. Scrolling down, nothing really that significant. Major losers, just for your reference, just 24 hours, so you need to look at the overall picture. Something I forgot to mention as well, you would have noticed that this video I gave very few references. And the reason for that is a lot of the information about dollar cost averaging, whether it be crypto or in general, comes from some of the major websites, and I'll avoid naming them because they're very antagonistic towards cryptocurrency channel or content creators. On the other hand, a lot of the crypto websites are more than happy for me to use their stuff, and I sincerely appreciate it. Just as an update there. Now, before I finish up, on a non-related note for crypto, I'm sure everyone has heard to a varying degree about the bushfires that have been occurring in Australia it's been at least 3 months now. As I hail from Australia, this is something that's close to my heart. The Red Cross, the Australian Red Cross, has teamed up with various organisations, and there are lots of different institutions involved in helping bushfire victims throughout this relentless and this extreme drought. If you're interested in helping out at all, there is information on this Red Cross website. You can donate some money. Fiat would be preferred, to be fair. If I find something where you can donate crypto, I will let you know. Every little bit counts. There's been some wonderful work happening out there. There's stuff on Facebook as well. I don't actually use that much Facebook for various reasons. Have a look around if you're interested. If you are in Australia and you're affected as well, there is a website here, which is an initiative by the federal government and the Australian Red Cross. That's a wrap of this video. Thank you very much. I really appreciate all of your support. Subscribe if you haven't done so already, and if you want to stay up to date to my latest videos, and smash the bell icon as well if you're keen to keep up to date with my regular content. I will be back doing regular content. I've taken a break for various reasons. If you have any comments, feel free to leave them in the comments section. Share this with anyone who you believe will be interested in this or benefit from the information listed here. What do you think of the information that I presented throughout the video and these websites as well? That's a wrap. Take it easy. I hope you're all well and that you all had an enjoyable break as well. I certainly did. Some time off after what was a very busy 2019 for myself. Links to all of these in the description as usual. And of course, please do your own research. It's not financial advice. And I'll leave you to it. See ya.